This is the MTPredictor weekly market update for January 27th. So heading into the end of January here, and you can see all three markets here, the Dow Mini on the March contract, S&P in the middle here, and the NQ on the left of the NASDAQ. This week, we're coming through earnings season. We've got the Fed meeting on Wednesday. You can see if we look at the NQ, that it took a bit of a hit with Apple's earnings. Netflix surprised to the upside, but we do have, you can see the pattern here. Again, we had our 5-wave pattern up in the NQ. When we look at the S&P and the Dow, you'll see that they've made new highs. They've taken out that wave 5 high, but the NQ has failed to do so yet, and we're in this solidly in this potential wave 2 resistance area. You can see we've got two red sellers candles. That tells us the sellers were overcoming the buyers the last 2 weeks in this resistance area. And again, we can project wave 3 down, starting at the top of the wave 5 high there, that significant high. And you can see the below just about 2200 there, and the NQ is the wave 3 target on the weekly chart. Again, bigger picture stuff. So here's the thing. Here's our next resistance area. If we take a decision point off of the top of wave 5 here, and that sits right around 2919, 2918 area. All right, so if they can take this area out to the upside, and if the NQ can finally catch up to the Dow and the S&P, then we should see that area up here. If it cannot, if it continues to be weak in here, it may then pull the other markets down, and we'll look at those in a minute and see where they are. So we'll see how that plays out. One of the two targets are potentially in the cards here. But it's going to a lot will depend too now on, if we look at the S&P here. The S&P again had that 5-wave pattern up, similar to the NQ, had the sell-off, but then they've marched higher here, taken out those highs. We've got another sell signal here in the S&P. It's what we call a decision point signal. You see there's divergence from the last swing high to the new swing high here, and between the oscillator there, divergence. And so we came within a few ticks of 1500, obviously a big level in the S&P, 1550 another one. And we'll see if the market, maybe it makes another kind of last rally into tags at 1500 to 1550 area. We certainly could go down from here. Now this is not what we call a standard trade setup. It's against the trend, which is obviously up here. But we are in some resistance here, and we do have divergence up here. So we don't see, what we don't see here is we don't have any red high volume spike telling us that professional selling is coming in here at this point. So I think that they may want to finish off at least tag 1500 and perhaps 1550. If we get to 1550, that will allow the YM here. You can see again the YM, that same 5-wave pattern up there. Move this stuff down. Then the YM later followed the S&P higher, and again a decision point sell signal. The software's picking up some divergence there in a resistance area. However, you see 1400 in the 14,000 in the Dow here. All right, that's another huge number. It's kind of hard to imagine that they're not going to make a run for that. A nice clean 14,000 in the Dow, significant number there. So again, no high volume spike here on the weekly chart, telling me that professional selling is coming in here. We do have a red sellers candle telling us that sellers were overcoming buyers last week. but we'll see. So we certainly could correct from here. The correction would be, well, you can put the analysis on and see, would be to the DP off of the last swing here. Again, not a standard trade setup because the trend is up. It'd be a counter trend, but I do think that 14,000 is so close, as well as 1,500 in 1,550 in the S&P. So we'll see as we head into Fed. Maybe they use the Fed as an excuse to rally into the meeting, or rally after the meeting. We'll see. I don't know exactly how that's going to play out, but anyway, let's take a look at a few other things here. I was just looking at the euro here. Again, here's the weekly chart of the euro. We had a 5-wave pattern down here, and again, typically after that 5-wave pattern down, you get a correction back to this wave 4, what we call a decision point. It's on its way there, and that will come in right around 36.70 in the euro US dollar. This is the Forex. The dollar index, as you may imagine, based on the chart of the euro, is weak. At least we had this little rally, this little decision point support kind of came off there, hit the 200 period here, has fallen off, and kind of consolidating here. So we'll see what forms from there. If it can find some more support here and rally again, if it tests this area down here, then we may see the euro get to its target. Again, the larger target here for the dollar, you can see, well, we came pretty close there, didn't we? Came pretty close, didn't quite get to that level, kind of double topped here, if you will, and before it pulled back again. And so we'll see. I think seasonally the dollar will probably come into some weakness, and we'll see how that plays out. If it can find support, or if it takes this out, then we may test the lower end of this range here. So watch for that. The the sentiment indicators in the market overall are not calling for a top here. They're heading in that direction, but they're not there yet. Let's look at bring this back and look at gold. Actually, let me look at oil here, because oil, if you remember, we had our buy signal here. This was a standard trade set up as the trend was neutral, meaning the bigger trend was flat. And you can see it's progressed ever so, step by step here. The target just above $100 at 100.89, and that's the minimum wave C target there. So wasn't sure how this one was going to play out. Again, you can always move the stop to break even once you achieve the 100% initial risk line for a risk-free trade on these bigger time frames, if you are a software owner there. And I didn't know if it was going to come back and test this area here, that $80 level. Again, it came just shy of that before this this rally here. So we'll see if it can finish out and tag at least that $100 area. So again, that 100 to 110 is your next kind of major resistance areas for oil. And then gold. Oops, wrong one. And let's add some more data to this. Alright, so we'll use the continuous contract here because we want to go back a few years. Again, buy signal here in gold, and that was calling for 1803 target. Basically, again, the interesting thing with gold that I pointed out before is we can go back. I'm just going to kind of scrunch this up. But you can go back all the way, beginning in the bull market of 2001, and each subsequent year after 2001, for instance, 2002, 2003, 2004, all new highs. Each year we had a new high in gold all the way up to 2011. 2012 failed to produce any new high in gold. Now we are in an area where we anticipate that buyers would be stepping in, and that is again below this 50 period, this red line here, the 50 period moving average above the 200 period. And you can see all the times going back to the start, basically after 9/11, that that's where the buyer stepped in. This dip to the 200 period moving average was a when the stock market was crashing in 2008, and you probably had a lot of selling in here just due to people taking their gains to pay for their margin calls and things like that in the other markets, as this market had appreciated pretty significantly, and so maybe some profits being taken there, or being used for margin call payments and things like that when the stock market was crashing. But you see the big nice buy signal that came in right at the 200 period, and again since then, 2008, all those opportunities to purchase have been below the 50 period and above the 200 period, and we have that same situation here. Again, the only thing is, like I said, we failed to make a new high in 2012, so something has changed. Does that mean now we're going to head into a period now of a longer period of consolidation? It could be. We'll see. Again, we want to see that 200 period hold. If the market does correct, as far as the stock market does correct, we could revisit the 200 period. Probably shake a lot of people up, shake a lot of people out, but won't be, again, something that we haven't experienced before during the gold bull market. So, and again, this you can use this to kind of monitor the silver market as well. So, all right, we'll leave it there. And again, Fed meeting on Wednesday. We'll get some more clarity, I guess, on their plans, and see how that affects the market. See if we can't get to that 14,000 in the Dow, 1,500 to 1,550 in the S&P. We're very close, so I think they'll try to maybe find an excuse to tag those levels anyway. So wish you a good trading week. We'll see you back next week.